Hey traders, welcome to another edition of Trading Tips. This week we're going to be focusing on trends. I'm looking forward to the topic, and I want you to check out one of our great products, First Hour Trading. You can check them out at firsthourtrading.com. Find out more details about the product, and in fact, in this service, what we do is we teach you how to make enough money in the first hour of the trading day so that you can take the rest of the day off. For those of you with active lifestyles, don't have a ton of time to monitor all your trades, go to firsthourtrading.com, download your free report. All right, so what do we got going on today? Well, a little bit about me. If this is your first time joining us for Trading Tips, I'm Jared Levy. You can check me out, more about me at jaredlevy.com. I've been doing this now for about 20 years in the financial space. Started off as a market maker on the floor of the exchange. I've done everything from trading on the floor to managing money off floor. I've also been a strategist for several big firms, and I also have authored 2 different books, mostly about options and derivatives trading. But I tend to focus a lot on technicals because, you know, it's interesting. 80 years ago, if you would have told me technicals looking at charts, I probably would have told you were crazy. But as we've come into the digital age, and being that more and more people are not only looking at charts, but getting into sort of algorithmic automated type analysis, understanding trends and what you're actually seeing in the charts is really important. In fact, a lot of our Trading Tips series has been about different formations in the charts and tactics to use them. What we're going to do, and actually this topic was sparked by my younger brother who's learning to trade, is learning how to spot trends, okay? We're going to do most of this session within the live marketplace. In other words, we're going to be looking at charts and actually finding trends and seeing if both you and I can identify them together. So let's go ahead and take a look. First of all, I'm at a website here called FinViz. It's a free website I just use to screen the markets. Again, you can use any tool you want. I'm not promoting them or getting paid by them, but they're a great little tool. What I've done here is just create a basic scan. I've picked stocks that are above their 200-day moving averages. I want a 50-day moving average that's above the 200. I want average daily volume of 500. And initially, we're going to be looking for channels or upward channels, bullish channels. And you can see that the word strong is in there. All right. Now, there's a bunch of different stocks that came back on the scan. We got about 58 of them. And I want to go through them and talk about what isn't an uptrending channel and what is, because sometimes these screeners can be incorrect. Now, it all depends upon your time frame. This is CISQ, Canadian Solar, and you could see that there are some big broad trend lines being drawn in this chart going back to August of 2013. All right, for the longer term trader, this is fine, okay? If you're looking for just overall longer term type trends, this is fine. But what we want to do here is, first of all, identify if the trend is indeed valid currently, in other words, in the short term, and if the longer term trends are intact. So we're going to look at 2 different sort of sides of the coin here. Again, CSIQ, let's take a look at it in a different package, and this will enable me to sort of manipulate the chart in a little bit more effective way. All right, so you can see here we're looking at a daily chart, and for most of you, shorter term traders or shorter term investors out there, if you're staying in a trade for less than 2 months time or less than a month's time specifically, really stay focused on that daily chart. And you can see here, if I begin to sort of draw some lines, yes, CSIQ is certainly in a bullish overall trend. Again, going back to August of last year, and I can zoom in a little bit here. I mean, heck, we can, the reality is there's our upward trend. And what you want to see is an evenness when drawing your trend lines, from a certain point. You shouldn't have to do much manipulation of the angles. In other words, the angles of the trend, this is just basic trend formation. The angles of your lines should somewhat coincide. I'm going to show you some charts where they don't. All right, so in this case, yes, Canadian Solar is certainly in a longer-term bullish trend, and that is confirmed by the fact that it's above both its 50 and its 200-day moving average. And by the way, the red is the 200, the yellow or mustard color is the 50. All right, I'm zooming in and out here a little bit. Now, again, we're maintaining that bullish trend. That looks good. What's happening right now, though? If we get really granular and begin to look at the stock a little bit more closely here in the near term, you see a couple things going on. You see, first of all, a series of lower highs and a series of lower lows, right? You see that? And again, this is almost, it's wedging, and we'll talk about that in just a second. But the reality is this trend has been breaking down. Now, in all fairness, the broad market has been breaking down over the past month or so, since the beginning of January and then into 2014. So a lot of times you're going to see stocks following this pattern. But what we've got going on here, again, let me back out for just a second, is we have a stock that's in a long-term and overall bullish trend. That's good if you're bullish. But in the near term, it's beginning to break down. When you see a series of lower highs and lower lows, that is an indication of less and less confidence in the stock itself. Now, the things we really want to look out for are a couple. Number one is we want to take a look at this average. The 50-day moving average is a major moving average. Once a stock breaches below that, if it's in a bullish trend, then we want to monitor for the stock to immediately break up through it. In other words, if CSIQ were to just fall below its 50 and close below its 50 for at least 2 days, to me that is the start of a breakdown of the trend. What's fascinating about CSIQ, and this again makes that 50-day even more important, is the fact that the 50-day and the bottom of that big channel kind of coincides with one another. So a breakdown out of that trend or out of that channel would constitute perhaps a major sell-off for CSIQ. Let's take a look at another stock here and see if we can't identify maybe some flaws in a trend, because that one was pretty clean. Again, a near-term breakdown, that's for sure. Ooh, here's an interesting one. Discover Financial Services, DFS. Again, overall trend since last month, definitely bullish, but there's a lot of volatility here. If we bring up, and this is TC2000 I'm using, if we bring up DFS in this chart, again, let's see if we can identify the patterns and draw the trend lines easily. All right, so here's June of last year. Let's draw some tops there. Again, you're matching, what you're trying to do is match the tops, the highs with one another, and keep that line sort of moving in the same direction to the right. And then on the bottom, are we able to do the same while maintaining a similar angle? And yes, we are. All right. Let's go ahead and let me shorten that up a little bit so the trend is even. Okay, so now we got a couple things working. DFS, definitely in a bullish trend. A couple things though. What's happening here in the near term? I'd say that DFS is definitely a little bit overbought, more towards the top of that channel. So yes, we remain in the bullish channel, but is this a good time to be buying? Probably not. Why? Well, the stock's been up consistently or constantly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row. We've also breached above the upper Bollinger Band, which I've talked about in past trading tips videos. And again, going by this trend, we're right at the top of the channel. So yes, DFS is in a bullish trend. So yes, if you're overall looking at DFS, it's probably, from a technical aspect, a positive buy signal. But in the near term, if you're trying to time your trade, you are at the top of that channel, which in this case, there's a couple warning signs. The top of the channel, the upper Bollinger Band being breached, and the fact that the stock has not pulled back in 10 days. All right, so those things together make for a problem. All right, are you getting to see this now, how we're drawing the trend lines, how those are all sort of connecting? I'm going to put a random stock in here. Let's just put an IBM and see if we can find a trend. All right, I didn't plan this out. I just stuck it in there. Now, what do we see that's going on here first of all? Again, use your moving averages. The 200-day moving average is above the stock price, which again is typically a bearish indication. The stock just got back above its 50, which gave it a little bit of a breakout. But again, the major moving average is definitely the 200, and the stock is below that, which is bearish. Let's look at the trend lines. Can we draw a clean trend line here? All right, you can see the stock sort of had a little bit of a hiccup. So let's find the two highest sort of points in this trend, here and here. I'm connecting these two, and I'll extend that trend line out a little bit. How about the bottom? From the bottom angle, and we may need to move the chart up a little bit, but let's draw a trend line there. Let's capture this line and capture that bottom. And again, because of the way the chart is angled, it's not letting me do it. But the overall trend in this case is definitely more bearish. You can find some of these lower peaks perhaps and connect those. And again, what we're trying to do here is see if the stock is moving in a rhythm. All right. And it's funny with this, some charting packages are a little bit funny in the way they behave. Your lines want to look parallel, okay? And you could see here on the screen, those lines look pretty darn parallel to me. And again, you've got a descending or declining channel, a series of lower highs, lower lows. We did breach above it a little bit here in early January, but we got back right, right down into that channel. So in this case, I would say that IBM, again, this rally could take, a fool for a ride, right? You're in a bearish channel, which is not a stock you would want to be buying for the longer period of time. The stock has been up, gosh, this looks like almost 9 days in a row. It's about to, it's bumping its head on the top of that channel. And again, you would obviously confirm this with the fundamentals in IBM. But in this case, the trend is definitely down. Let's look at some other trends here that I really enjoy and that I think are pretty powerful. And if we go back to the screener, now I reset this thing, but let's just pull up some quick patterns here. Let's look for a wedge up strong. I want to have a stock with good volume. I generally like over 500,000 average daily volume. Again, that's daily looking there. We want a stock above its 200-day moving average. And I'd like to see the 50 above the 200. Did I select the right thing there? Nope. 50 above the 200. All right, and here we have a couple different stocks. And let's see if I can identify some good candidates and true wedges. Because a wedge, this is interesting here, this is the Blackstone Group. And there we have a nice bullish upward channel. Now, a wedge formation is a formation where you have a stock, basically the volatility is decreasing and decreasing and decreasing into a point. And that point is a point of breakout. When the point sort of comes together, and I'll show you that in just a second. Let's look at the Blackstone Group. And again, you have a nice clean bullish trend. That's working. The stock's above its 50. It's above its 200. That's great. Take a look at this of what's going on here. This is the wedge. You've got a stock that was, a little bit more volatile. You had a lot of price swings. And then it became less and less volatile. Usually this happens right around a moving average, the 20, the 50, something like that. And the point of this exercise, or the point of the wedge, is a stock that's sort of compressing. You can think about it as a spring, compressing and compressing and compressing. And if you have a bullish overall trend and a stock that's above its major moving averages, and it's compressing and holding above a major moving average, in this case the 50, this would be a bullish signal. And again, I'm talking in generalities because there's other things to sort of consider. But in this case, on this pullback we're having today of 45 cents, this Blackstone chart would show us a bullish wedge. All right, that's what the wedge looks like. Real quick here, I'm going to show you, because I don't want to take too much of your time, we're going to take a look at a bearish wedge and see how that looks a little bit different. Okay, and again, what we're going to look for here is a price below the 200-day. Preferably the 50 is below the 200. And let's see what stocks we get back. I have a feeling there's not going to be a lot. Yeah, 18. Why? Because the market's been rallying over the past year. It screamed in 2013. And even with the pullback, I don't really think that we're going to come back with a lot of candidates. So here's some stuff going on here. What I'm doing is trying to find... The nice part about this is you can mouse over and find yourself some interesting... or some previews for charts. Here's AEGR. I'm not familiar with this company. Pharmaceutical companies tend to be a little bit more volatile than I like. But let's see what we got going on here. Now, here's one where we see a larger wedge. Okay, let's go ahead and bring back up TC2000. And actually, what was that symbol again? AEGR. Let's enter that in the charts and take a quick look. Okay. So first things first, let's back off just a bit here. And again, usually, by the way, I didn't mention this earlier, when you're looking for the longer term trend, you want to go back at least a year to a year and a half to identify the overall big trends. And definitely in this case, I mean, heck, we could just draw it from here. You're in a, whoops, that's a Fibonacci retracement. We don't want that. You could see the trend is definitely bearish. Okay, now the wedge that we've got going on, there's actually two different wedges forming. You can sometimes spot a wedge by looking at the Bollinger Bands and looking for them decreasing. Okay, and believe it or not, take a look at this. This is interesting. So here in this area, that was actually a wedge that formed. You had these periods of high volatility, and then it sort of came to a point right around the 20 moving average, and then we had a breakout to the upside. Again, that was a shorter term trend, shorter term wedge. The farther back you go in time, or the more data you use to identify your wedge, the longer that wedge might take to play out. In other words, if I'm looking at 5 days of data and I see a little wedge in a period of 5 days, the breakout's probably going to come, in a day or so, and that breakout might be just an intraday breakout. Whereas if I'm looking over a longer period of time and and trying to identify a wedge, that breakout, or in this case the breakdown, might be even greater. This is a bearish wedge, and actually in the near term here, you have, I can actually get rid of this line. You have the top portion of the channel. You have a stock, yeah, it was a little bit more volatile, but sort of slowing down as it comes into the top of that channel. And right here you can see, right where my mouse is in this area, that is the apex of the wedge, or the corner of the wedge. And in this case, I would say that there's more of a likelihood, and you can see it's bumping its head on its 50-day moving average. There's more of a likelihood that this stock will move lower. So just to recap here, guys, when you're forming trends, make sure that the trends are sort of easy to see. Back out of your charts using the daily chart, look over the past year to year and a half, try to match up the highs with the lows, and try and find yourself a nice clean trend. That'll draw the outer boundaries of that stock current channel. Now, when identifying a wedge, when looking for breakouts, you want to find a stock that has a lot of volatility, that's maybe becoming less and less volatile, and if you're bullish, is moving to but above a moving average like the 50 or the 200. If you're bearish, you want a stock to be in a bearish overall channel, and it could be moving up, but into resistance, which would be, again, that 50 or 200-day moving average. Again, I wanted to thank you guys for staying tuned for a little bit of a longer session this week. Again, check out our product, firsthourtrading.com. You can sign up for a free 30-day trial, firsthourtrading.com. We'll see you next week here on Trading Tips.